Hello everyone, welcome to my channel Risk Analytica. Today my session is on the credit lending cycle or the credit life cycle, or we can also call it the time to cash. Okay, so whenever we say life cycle, it means that how the process has started and where it ends. Okay, so through this journey, what in this session we will be discussing on that through this journey, like the lending cycle, what are the different department comes into the picture and play their vital role, and how the process can be done so smoothly so that the customers or the borrower who has requested us to lend money to them, their account would be credited. So that is basically the credit life cycle and time to cash, that how much time it is taking to get the borrower's account credited with the loan amount, and they would start enjoying the withdrawal and make all their, you know may it be like the business purpose or personal any personal requirement short of. Okay, since we are discussing, all of my sessions are related to the credit modeling or the credit risk. Hence, I will be focusing on the corporate lending structure, how banks comes into the picture, bank or any financial institution, they come into the picture and they play their pivotal role while doing such lending activity. Okay. Now, in this slide, we can see that credit lending cycle, it has two important phase no, phases. Number one is the pre-approval phase and the second one is the post-approval phase. So pre-approval phases are most critical. Like we all know that customers, they are globally located. So one particular department of every bank or financial institution, which includes RM and the global relationship manager or global relationship banker, they would get lead and they will visit to the customer and will ask them what are the different products or the facilities they are looking for. Okay, facilities or the product for a bank to offer is basically the loan. So loan has different types of loan. It can be short period of time. Any corporate entities, any business which needs immediate cash to, which is less than a year, for any purposes they want to spend that money, be it utility payment or be it labor payment or any urgent material purchase, or the order they have received for which they have to buy more raw materials for which they require money. So that could be related to the shorter requirement, and the longer facility or the long-term facilities could be the long-term loan, any debenture bond, okay, or any syndicated loan. There are various types of loans are available. In my subsequent sessions, I will cover all those products in details and how it is related to a bank or financial institution and why it is required. Okay. Now, the lending cycle will starts from RM visiting the customers. They will note down all the products, and then RM will get all the important documents from the customer to onboard into the bank's system. What are the different steps? What are the different sources to check the credit history, credit score of the customer, or any bankruptcy or delinquencies or whatever, or any other government sources or the private sources to do the due diligence I will take a separate session for each and every, phase of the lending cycle. Now, the spreading is basically how the customer or the borrower, they have prepared their annual report or the financial statement. What are the different types of financial statement? I will complete again in my subsequent session. So financial statement, which is an important requirement to initiate this spreading process. After that, the credit application and the facility management team, they will start their work. Okay, then the credit analysis division or the department, they will do the end-to-end credit analysis before lending the money to check the probability of default or any uncertainty. After that, there is a department called credit approval. They have the authority, they are basically the underwriter. They have the authority to approve a certain loan, or they can reject, or they can resubmit it. Resubmission means probably they have identified some discrepancies for which they require more documents, more evidences in order to move ahead and approve that loan. After that, there's a lending documentation team which generally collects data pre-lending and the post-lending phases. Okay, what are the important documents, be it like a facility offer letter or any other important documents which are pertinent to lending to the borrower. Okay, then there is a separate team called collateral management team. They would see what type of collateral the borrower has pledged in order to avail that loan facilities. Okay, what are the present value of those collateral and everything. Then the loan amount will be loaded into the bank system, and then there are certain mitigant verifications will be done. And after that, once the loan get loaded or the amount get loaded, the borrowing amount get loaded into the bank system, then it would be credited to the customer account and customer will start the drawdown. Drawdown is basically the withdraw money. Okay, so these are the steps which plays a major role in order to approve a borrower's requirement. And again, it is also related to the time to cash. So all these stages will complete, then the amount will be credited into borrower's account. So every bank or financial institution, their primary focus is to reduce this time and to get more customers. So I will, in my subsequent session, probably in the next session, I will pick it up on the KYC or and the RM and the customer separately, and along and gradually will complete all those stages of the credit lending cycle. Thank you for your patience. Take care. Bye.